Hello, ladies and gentlemen, and welcome back to the OBR YouTube channel. In this video, we are going to be doing the market forecast for the week of April 25th, coming up on our last week in April. In this video, if you're new to this series, what we do is we go over some of the top stocks to watch in this upcoming week, including the technical analysis that you should keep an eye on, the fundamental drivers that you need to be aware of, and the earnings in the S&P 500. My name is Logan Silver. I am a options and currency analyst with OBR Investing. I've been a proprietary trader for a long period of time, and I've been a risk manager at a proprietary trading firm in the past. And without any further delay, let us get right into this week's video. So at OBR, we know that 90% of traders lose 90% of their money in the first 90 days, and we are here to make sure that you are not one of them. And in order to not be one of them, one of the best things that you can do is to be informed. So to help you with that, we're going to cover the fundamental drivers in this upcoming week, and thankfully, we do not have a lot of news in this upcoming week. By the way, when we cover news on this channel, we're only referring to high-impact USD news, meaning news in the US. And for this week, as you can see, in Eastern Standard Time, we only have news at 8:30 a.m. on Thursday and on Friday. On Thursday, we have advanced GDP numbers, and on Friday, we have core PCE price index numbers coming out. So now that that's out of the way, as you can see on screen now, is the earnings in the S&P 500 for this upcoming week. Here we are, moved over to the charts. We're going to cover SPY first. We use SPY as a general gauge for market sentiment because SPY is the S&P 500 ETF. So it's the same thing as looking at the S&P 500. If you're familiar, if you follow the markets actively, you'll know that Thursday and Friday of this last week have been incredibly bloody and definitely were validating our bearish thesis. If you've been watching this channel, we've been talking about a bearish thesis that we've had using Elliott wave theory, which is a form of technical analysis, and in my opinion, the best forecasting tool that you can possibly use in financial markets or just about anything that has a chart. Regardless, we've been looking at SPY and the S&P 500 to go below our low on SPY at 410. And last week has shown us more confidence for sure in that thesis. That's because we had a very bloody Thursday and Friday, taking us in total about down 5%, 5.5%. We just recently broke back beneath some very, very important support at the end of day on Friday, so that's definitely important to keep an eye on. We are approaching a support line. I'm not sure how valid this support line will be, but I am expecting Monday to have a little bit of relief considering just how bloody the last 2 days of the week were, but I am absolutely still expecting prices to continue lower. This price action that we had on Thursday and Friday is very stereotypical of wave 3 price action. As you know, we use Elliott wave theory. Elliott wave theory means there is a 5-wave move. Wave 3 is the most impulsive. Just to quickly highlight the framework, we have waves 1, waves 2, waves 3, waves 4, and wave 5. So we're in wave 3 now to the downside, obviously. And this wave count should carry us below 410, like I'm saying. We're looking at the range of 390 to 380 first. If we break through those levels confidently, then we'll look for more downside. But until then, we're just looking for 390 to 380. Broke beneath some very important support, probably going to continue lower after a little bit of relief. Our next area of support is going to be around these two levels, where these two levels coincide. Perhaps around from the 417 level down to the 412 level. Again, the only real support that we have here being 417 and then 410. Regardless, the reason we went so in-depth on SPY is you'll see that that same thesis carries over into a lot of the other things we're looking at this week. Moving into Target, which is one of the things it does not actually coincide with, the retail trade sector has been doing incredibly well. Target and Walmart will be going over this week. But Target looks amazing to continue higher once we get a little bit of a pullback. We obviously had a very impulsive move here on Target. Very clear 5-wave move I just highlighted. 1, 2, 3, 4, 5. Now we're looking at a ABC correction. This is again Elliott wave theory, just how the framework works. We're looking for a 3-wave corrective move, perhaps down to 235, where our prior resistance is now acting as support. So looking for some more downside on Target, then some upside. Apple unfortunately invalidated our head and shoulders pattern that we were looking at on Thursday and Friday here. We did break out of this resistance level that we had, this downward trending resistance channel. We broke above that, got a nice little play to the upside, and then bounced off of this resistance here at 171.11. Just broke support at 163.60. Now looking for Apple to definitely come lower. Again, most likely expecting a little bit of relief, perhaps a retest of this level, and then a continuation. That's going to be the play that I'm looking for in Apple. A retest of 163.50, and then a move to the downside. NVIDIA just broke beneath multiple month support level. I'm looking for the same thing I'm looking at on Apple on NVIDIA. Again, a relief rally and then a continuation to the downside. This relief rally should carry us up to 205, 206, 207 range, and then a move to the downside. Retest this support, acting as resistance now, and then a continuation trade to the downside. Lines up with SPY, lines up on Apple. As you notice, a lot of these bigger names are going to obviously follow each other. Tesla has been in some pretty nasty consolidation recently between the levels of 975 and 1073. We do have a middle resistance support area here at 1022, but right now, because we're below that, I do think we are going to come back down to 977, if not breaking below that level. Boeing provided a great play on Friday after we retested this wedge that we broke out of with this wick. We got in, rode this all day Friday. Now we are approaching a new support. I will look to play Boeing continuation to the downside once we break that support level. Perhaps we bounce, perhaps we come up a little bit. Either way, I'm definitely bearish on Boeing. We do have resistance here that we can keep an eye on. As you'll see, guys, we're using very, very standard technical analysis tools. It's not about the tools that you're using, but rather how you're using them. And if you know how to play these patterns, they work out extremely well, and they definitely work out in your benefit. So we are filling a gap right now on Boeing around the 176 level, so keeping an eye on that. Gamestop does look quite bullish, actually, should we be able to break out. And it's funny because you'll see that GameStop can move inversely of the market. That's just how meme stocks work sometimes. You'll see AMC probably perform well, GME perform well, Bed Bath & Beyond perform well, should the market continue lower. So keeping an eye on GameStop. Walmart, again, more in the retail trade. We're looking for a retest and bounce, just like on target, at the 154 level. So, ladies and gentlemen, I really hope you pulled something valuable out of this video. I hope you took something out of this video that you can take into this next week and hopefully make some money on. If you did, all that we ask is that you please like and subscribe. Yes, right now, please. We greatly appreciate it. As always, on behalf from everybody at OBR, happy trading, and I will see you in the next video.